Hey traders, checking in on the stock market today. So an FOMC fake out, certainly not surprising to see it, but it was a bit delayed, happening overnight with a very clear technical signal in the NASDAQ futures. We'll look at that and what the clear red flag was for the bulls. I made some mistakes as far as shifting my portfolio weight back to the bulls a bit yesterday. I'll go over what I did right and what I did wrong, and we'll look at where we stand after 24 hours. We go from FOMO back to fear, and no daily trend changes on our bounces yet in the tech sector names. Let's look at the charts. All right, so starting it off with SPY, we opened weaker this morning and dropped down notably into further daily consolidation. So what we were looking at from the end of yesterday's video, obviously the bullish reaction to the FOMC, but the double top on the NASDAQ futures chart was just something we needed to be aware of, to be watching overnight. Well, on the hourly, here was our top of resistance, here was our double top at the end of yesterday, and here's where we closed. So we rejected from resistance very clearly. No major red flags. We're just looking for an hourly higher low to form on that rejection. And again, that's what we were watching overnight. So I personally, as a day trader, nothing frustrates me more than exactly how this played out. And this is why I will always be more a day trader than a swing trader, because in this scenario, it was a crystal clear red flag for the bulls where you have a triple top. So we established a support level. Let's go to the half-hour time frame. So here's our end of the day consolidation. And the end of the day low of consolidation is now our support. We headed back to the double top of resistance. We rejected. We dropped down, held support. So here's a classic equilibrium with our double top, higher low, lower high, higher low, lower high, bear break. Just a standard 30-minute equilibrium breaking bearish and completely changing everything. So why this is so frustrating to me is this happened, the bear happened at 3 a.m. in the morning. So if I am trading crypto or if I am trading futures, I can act on the very clear technical signal. If I'm holding an Apple position or holding NIO or holding anything, I literally have to watch. You're probably sleeping. I was sleeping. But you literally have to watch a very clear signal that you otherwise would act on. You know, that bear break, I would instantly start repositioning myself, exiting some longs, adding some shorts, and by the time the market, pre-market rolled around, we're already down 1 to 2% from where the very clear technical signal was given in the indice. So that is, for me, a very frustrating way for it to play out. And we now have a triple top of resistance, very clearly setting the top of this bounce, and we broke the low of yesterday. So I said in the video yesterday, break the lows of today, and that is definitely going to be firing off all kinds of red flags, because if the bulls are going to prove they're strong on the FOMC reaction, we need to follow through from here, and obviously we didn't. So we've got our low, high of the bounce, and we're still searching for a daily higher low. And looking at our fib retracement, that retracement is now more significant. The low of today is now a 50% retracement, which instantly shifts the bull flag, which was attempting to confirm and rejected. And now we're looking at what bulls are hoping for is an equilibrium as the more likely scenario. Could still form a daily higher low and higher high, but pretty much the low of today would have to be the low if that were going to remain on the table. So the things I did incorrectly, adding to metals, definitely would have gone better if I didn't add to metals. So I woke up this morning, I didn't trade today, aside from repositioning first thing this morning. So yesterday I swung some added metals, some added MSOS, the USMJ sector, and I had a PENN position, half a position left from a trade earlier yesterday that I swung, and I trimmed up my QQQ short a little bit. So the one saving grace there is the USMJ sector, MSOS, opened today higher, and it went up 2%. And that's because it was riding some news and some bullish earnings reactions, but that is really what saved me. When the bell rang, I exited my pen trade and gave back some profit. It was still a green trade, but gave back profit, and then just did some repositioning where I ended up on the day only down a day maker. And yesterday was a 3-day maker green, but it did break my streak where I went 9 green days in a row, and today was red. So I didn't day trade, and I wasn't able to offset the red that my bull-leaning swing position put me in at the open. Another good thing that I did Number one, choosing MSOS for my long stock exposure increase, because again, the sector was up nicely to start the day. And the other thing I did right is ignore a little voice. The little voice in my head said, exit all of your QQQ short and go long. You don't need that hedge anymore. And I didn't listen to that little voice. I trimmed the position, but still had a decent little chunk. And that green on that position helped offset some of the red from the metals. So in the end, a notable fake out. I'm going to be lightening up my swing exposure capital overall and just sticking to day trading as always, because that is what works best for me. And I hate that overnight move that you can't act on. It's like, why handcuff yourself? So, SPY, retracement is much less significant on this pullback at this point. We've got a pullback of still well above the 382. So obviously a much different setup than what the NASDAQ is doing. And I'm sticking with this NASDAQ chart, watching for a 4-hour trend change back to the bulls to be looking for a daily higher low to be set. And it's going to take a while if we're going to set up a 4-hour trend change. And hourly RSI did get oversold right at the end of the day. So we're still scouting a daily higher low compared to the low of the drop. And we still have to see a confirmed daily trend change for bulls to be back in the driver's seat. IWM, further daily pullback. Could have been a bull flag, absolutely. Failed to break the high of yesterday. First thing, we actually broke it by 11 cents. So a double top at the high of yesterday, and then a pullback. And again, we're gauging the size of the pullback. We're watching the fib retracement. Still holding 382. So again, a much better positioning on SPY and IWM than the NASDAQ at this point. XLF looking a little toppy. We've seen this before, so this doesn't mean bears in control, but there's some other clues to be watching. So what I mean by we've seen this before is big pullback, daily higher low, bull break with zero follow through, just another daily higher low. Bull break with little follow through, just another daily higher low. So here's a new bull break with zero follow through. Can we form another daily higher low? Why I think this time might be different. Number one, the volume behind this climax-like candle, and the previous high volume candles were on daily higher lows, not on bull breaks with no follow through. And we're watching this key daily support 33.94. If that level breaks, we lose the daily uptrend. So why I think we may be in for the potential, what I'm watching for the next few days, is more pullback in XLF. And the reason being, we have not seen weekly consolidation in 6 weeks. That alone isn't enough for me to be looking bearish. It's having me anticipate weekly consolidation, but there were other names that we said that same thing for. XLE had the same pattern. Higher low every single week, no weekly consolidation for 6 weeks. It started weekly consolidation on Tuesday. Tuesday broke the low of last week, and weekly consolidation began. Then today, oil followed suit with a dump, finally rolling over. And we're going on to a different futures contract. You can see CLJ here for April. Volume is non-existent. So that tells me we're on to a new futures contract. And it's CLK 2021. And there's your volume. So CLK 21, daily lower high and lower low. And when we confirm the daily downtrend for the first time in a very long time, the bears just ran with it. And we went from 63.10 as the bear break all the way down 8% lower almost. That's massive follow through. But the point is, no weekly consolidation for 6 weeks. Here's our weekly consolidation. This is the most convincing bear candle on oil since the bottom in November. So this was the same weekly chart on oil, energy sector, and financial sector, and the airliners. Nope, a little bit different. So those three. And who has yet to start weekly consolidation? XLF. So is XLF going to follow the energy sector and going to follow oil? I'm watching for that from here. And XLF, I wish today had more hours because I would look to short an hourly lower high and put my stop over the high, and that would be my entry for a bear attempt, a low-risk bear entry for the potential of weekly consolidation. So I'll be watching for that. We'll see how tomorrow opens. Maybe there will be an hourly lower high play tomorrow morning. But bears will have to lose the daily uptrend on XLF to prove any follow-through to us. From there, I'm losing all our tickers here. We did IWM, XLF. So Tesla, again, just look at some EV names. Still pulling back. We did hold that low of yesterday, just barely, but unable to change a daily trend, and we're trying to set, unable to confirm a bull flag, and we're trying to set the daily high or low compared to 539.49. No daily trend change on these bounces at this point. And you can even look at the ARC ETFs, same thing. Pulling back, looking for the higher low compared to the low of March. And obviously, if we break that low of March, bears are going to get a lot more confidence, and there's going to be a lot more fear in the market. So we're keeping an eye on that. Biotech sector. So daily time frame, top of the bounce, looked like a potential bull flag, and then rolling over more convincingly. We're still scouting a higher low compared to 128.44, and you can feel the fear. You can feel the palpable fear today. And when you're looking for daily trend changes, we know that patient bulls have been waiting for a daily high or low for an entry. The bulls that missed the initial bounces on our tech sector and our EV names. And so for those bulls that are aggressive and are going to be trying to enter a daily high or low, you've got to master those emotions, because those entries are made when that fear starts to pick up again. And what helps that fear be subdued is, of course, having a clear stop level and using position sizing that makes that risk acceptable for the potential reward. So while there was definitely notable fear today, I am going to be watching for daily higher lows in QQQ and the EV names and everything that's correlated to it, like XBI. Now, if we see increasing bear volume tomorrow and another big red day, then the odds that we break support will increase a bit. But otherwise, we are scouting daily higher lows. Solar sector, very weak comparatively. So again, fibs. If I want to measure how much of this move have we given back, it's over 50% at this point, and this makes it one of the more notable pullbacks. It makes the daily trend change more difficult, and we're looking back down at that 80-80 low. So I can look at this for potential clues. If TAN breaks bearish, it's probably going to break bearish first before QQQ and before electric vehicle names. So we can be watching this for potential clues, but it is pulling back more from the top of its bounce, more than most other sectors that we are watching. Semiconductors, so big pullback as well. A lot of space for the bulls to work with, but we're back in consolidation mode. Did we confirm a daily trend change? Again, as I mentioned in the recent video, that depends on your criteria. For me, it wasn't convincing enough, and if you go to the 2-day time frame, it's a much more clear bounce, lower high, and now we scout the higher low. So SMH has more space to work with, certainly comparative to TAN, to find that higher low. So MSOS did confirm a little daily bull flag, but unable, it was able to offset broader market weakness to start the morning, but the second half of the day, really the last 2 hours, QQQ just dumped. And it's that last 2 hours that we saw the USMJ sector roll over. So MSOS, looking at the day, held on fine all morning. Look at that bull start to the morning, just fine, and then rolled over in a big way. So we're looking at the low of yesterday as our next support level. And again, still well above 40.80, our low, but not going to be immune to broader market weakness. The dollar, bear break with a lack of follow through. What does that mean? Zoom out and scout a weekly high or low. So weekly chart, because of today, is still favorable for the dollar bulls. If the dollar bulls get over 92.03, then we're looking right back at the high of this bounce. So that was a fake out as well. Confirmed daily downtrend, zero follow through, straight into a notable bounce. And that definitely had a negative impact on our metals, which had their daily trend change bullish with little follow through. On gold here, we're watching for a 4-hour lower high to be the result of this bounce. And it's notable to me that between gold and silver, look at 9 a.m. to noon. Let's go 9 a.m. to the close. Bounce, bulls. So that is all bulls from 9 a.m. And look at what silver did. Very different. You won't often see silver and gold this different from each other. There's the same bounce, 9 to noon, but noon to 3 was a drop, and a pretty notable drop, setting up an hourly equilibrium. And gold, again, very different from noon to 3 a.m. So gold and silver going inverse a bit, but I like the 4-hour clarity on silver for the lower high, and I like or 4 hour on gold for the lower high. And I like the hourly on silver, trying to set a higher low and watching for an equilibrium. Miners. Daily inside bar. So all things considered, not a huge red day, but just watch that low of yesterday. Just like our sectors in the broader market, if that low of yesterday after that big bull move were to break, it would be a red flag for the bulls. So I'm sticking in my metals positions, which at this point I added to them and calculated that if my stops were to trigger, and my stops being at the low of this month, then that would be acceptable. It would be a nice loss, but certainly acceptable. And I would just make it back day trading. And that's the confidence. When you've been doing this for a long time and you have that confidence, every loss, I don't fear stopping out and getting losses because I know I'm just going to make it back tomorrow. As long as I keep that risk mitigated and it doesn't run away from me and I give away a month's worth of profits, if I'm giving away a couple days worth of profits, I'll make it back in a couple days. So we have the oil CLK 2021 big drop weekly consolidation underway. We're watching an oversold bounce attempting to get underway here. We're just going to look for an hourly lower high. Why is oil dumping? Overextended. You could look and say, well, we have some COVID cases increasing again. I think France might be going back down to some kind of lockdown. So pretty much any narrative that talks about increasing COVID cases and less travel is going to drop oil. But again, bigger picture, we were very due for this pullback. If you look at this weekly chart going essentially 80% with very minimal, pretty much no weekly consolidation. And we'll just be looking for a daily lower high next time we bounce. Natural gas, dropping to lower lows, bears keeping their complete control. That support of 242 is still in play, but bulls are proving absolutely nothing with just the 4-hour downtrend continuing. So that is where we stand. Still in some QQQ short to help protect. And again, I will be lightening up, probably re-exit half of my MSOS position if we see further bearish downside. And then my focus from here is going to be scouting daily higher lows. I've got two focuses: scouting XLF, losing the daily uptrend and joining energy and oil in weekly consolidation, and scouting QQQ for daily higher lows. Broader market bulls, SPY, you really want to see XLF. If we see weekly consolidation on XLF, you really want to see a daily higher low on QQQ and for that to be an inverse relationship. Because if we see QQQ fade back down to that low and XLF lose the weekly uptrend, lose the daily uptrend, that's when we're going to see broader market notable fear. So I'm watching for correlations between those two sectors to be inverse, to potentially be watching for higher lows on QQQ. And I'm just going to choose, I'm going to be scouting NIO and Tesla for those daily higher lows, and some Canadian MJ, APHA. And that's just because I'm more comfortable day trading those names. And I've been watching them a lot more closely. But whether it's, Apple or whoever, everybody's watching higher lows compared to the bottoms. And again, there's clues. If Apple breaks its low and QQQ hasn't done so yet, we know the odds increase the QQQ is going to follow. So that's why I'm watching everything and all these moving pieces at once. So that's as good a summary I can give as far as what I'm watching over the next 2-3 days. And that's that. Hopefully today didn't sting too much. Again, it's a tough world swing trading recently. And if we look at QQQ specifically, where we've had these weak closes, strong opens, strong closes, weak opens, opposite candle, opposite candle, opposite candle, another opposite candle. This whole bounce has just been the opposite happening overnight from what happens during the regular trading day. Which to me means less swing positions, more day trading, and patience. I hope you have a good rest of your day. Do some good things out there, and we will see you. What's today? Thursday? We'll see you next week.